Hello, good morning. You're watching Buy Now, Sell Now on ET Now. I'm Vinny Motiwala with me, Cheryl D'Souza as well. Cheryl, a very good morning to you. Surely started on a bumper note this Friday morning, but as of now, given up those high levels, right?
Absolutely.
I mean, it does merit it looking at how it's touching new highs.
I think we are just off a greed mindset, right?
Yeah.
The fact that Nifty hit 23,000 mark on an intraday basis for the first time ever, we are not satisfied with that, isn't it? No doubt, but yes, we did start on a very subdued note, given the fact that we had a weak global handover. From there on, we only actually started seeing a sharp up move. We scaled past that 23,000 mark on the Nifty, comfortably above those levels, and then we gave up those gains coming in on Nifty. Nevertheless, it's been a week of record setting moves coming in for the Nifty, and not just Nifty, also Sensex. Let's not forget Sensex, because Sensex scaled past the 75,500 mark on the intraday basis, a fresh new high coming in for Sensex as well. You also have a Nifty mid-cap index that's perched at a record high level. So yes, great going coming in for all of our markets, for our markets, as you can see it on your screen. And now we are trying to actually claw back from the day's lowest point. That is the benchmark indices that I'm talking about. But let's take a look at what the other part of markets are doing. Let's not lose sight of what the Adani Group counters have been doing. In fact, there was a notification a short while ago that all the Adani Group of counters have actually erased all the losses that they had posted post the Hindenburg report. So all of them have recovered those losses, and hopefully all the investors holding those counters are now at least will be happy. But let's talk about the other section of the markets. You have Apollo Hospitals, Adani Ports, Tata Consumer, Shriram Finance and TCS among the top losers on the Nifty as we speak. While on the gaining front is Adani Enterprises, Bharti Airtel, Ultratech, L&T as well as HDFC Life. Taking a look at the sectoral indices quickly right now, you have Realty and FMCG that are taking it a bit easy, while you have the PSU sector, the metal sector holding on to good gains as of now. So that's the way how the markets are looking like at this point in time, Vinny. But yes, you have the pharma sector that's taking it a bit easy, and also Max Healthcare that's reacting to its numbers.
Absolutely, Max Healthcare reacting to its numbers. We will be talking about that. And right now we're joined by Abhay Soy, the MD and CEO at Max Healthcare Institute, to talk to us about the outlook going forward for the company. Thank you so much, Abhay, for joining in with us this morning on ET Now. When you look at your numbers right now, double-digit growth in terms of revenues as well as EBITDA, but the bottom line, that's seen a decline on a year-on-year basis. Can you help us understand what's impacted your numbers in terms of especially the profitability this time?
No, so whilst we've had a 16% year-on-year growth in EBITDA, you've seen, sort of these kind of flat performance as far as net profit is concerned. And this is largely, if not entirely, due to higher incidence of tax. So in the previous year, our EBITDA to free cash flow translation used to be 70%, 78%. It's come down to 70%. So it's just a higher amount of tax that we're paying.
Right, very good morning to you, Mr. Soy. This is Shallo, so joining in the conversation, and let's put focus on your RPOP, because your RPOPs have actually shown a good growth to about in the quarter gone by. Actually, how much was the push due to the price hike, and also if you could tell us what's the outlook going ahead for that particular segment or element?
So, as far as RPOP essentially is average revenue per occupied bed. So it has less to do with volumes. I mean, it has nothing to do with volumes. It's per occupied bed, irrespective of what those volumes are. But as far as the price hike is concerned, typically the price hike impact on revenue is about 2.25%. And the rest is real growth, both in clinical as well as payer mix. Do keep in mind, any hospital chain which has capacity constraints going forward will see a lower increment in occupancy, but a higher increment in RPOP, simply because you don't have the beds, and then you sort of prioritize the more higher end surgeries and procedures, etc., which leads to higher RPOPs, and yet because you don't have any spare capacity, occupancy is tempered.
Okay, and as the company has major capex underway, do you see any impact on margins in the next couple of years on the back of that? And since generally, when you look at it, the company sees that occupancy levels are lower for newer facilities, how does that also shape up?
So it's about 75%. It's always been above 75% every quarter of last year, and I think last many years that I can remember. It's never sort of been 74-75% is perhaps the lowest levels that we have operated at. So depending on seasonality, it fluctuates between 74% to about 77-78%. The new facilities, of course, are operating at about 65% occupancy levels. This is lower occupancy levels, but we expect a hockey stick growth over the next year or so, as far as these the new additions are concerned. And once we've sort of put our turnaround strategy to bear, we see overall occupancy also sort of increasing. We will be coming up with new capacity in the current year. 300 beds will be operational in Dwarka the early part of June. So that should lead to further capacity and yes, further ability to ramp up as well.
Right. Mr. Soy, Max Labs has actually shown a good growth of over 20%, and this has been a consistent growth coming in from Max Labs. What are your plans about this particular segment? What are the outlook that you have on this? Also, any update on price hikes? Did the company take any high price hikes in that particular segment in the quarter gone by?
So, we have consistently seen a 25 to 27% or 28% growth, which is, year-on-year growth. And for us, it never sort of come down this number. Again, this quarter, there's been a 27% growth on a year-on-year basis as far as Q4 is concerned. We're seeing very healthy numbers in Max Lab, and competitive intensity, as you're seeing, maybe back now wasn't there previously or was there, but we've seen the same amount of robust growth and we continue to see.
Okay, and just lastly that we want to understand, we believe that for the expansion of the company, you all are open to inorganic opportunities as well. Any specific geography or segment that you're eyeing?
Well, there are about 21 cities where we believe at least one or two of our peers have proven viability. And we intend to go there and do it better. So those are already proven sort of charter territories for us, and that's what we're looking at, quite simply.
All right, Dr. Soy, we leave it there. Thank you so much for joining us on ET Now to talk about the quarter gone by coming in for Max Healthcare and what's the outlook going ahead for the company. That was the MD and CEO of Max Healthcare outlining the growth prospect as well as the outlook coming in for the company going ahead. But let's take a look at where the stock is right now, because yes, the entire pharma pack is under pressure in trade today. Max Healthcare also reacting to his number. There you go, holding on to the loss of about 1%. Let's take a look at Fortis Healthcare also. That one also came out with his numbers, and where that particular stock is actually perched at right now, 1.25% downtick coming in for Fortis Healthcare. So yes, anyways, you have the pharma sector taking a bit easy today. You have Laurus Labs also seeing a sharp decline in trade today. But let's not forget, Vinny, that today is everyone's favorite day of the week, and not because it's Friday, but because it is Buy Now, Sell Now Pathshala Day, isn't it?
Absolutely, and as always, Kunal is going to be telling us what are we learning today? Gap Up, Kunal, I've heard about it, but what is it that in detail that we should know about Gap Up? What is it on the technical terms?
Well, absolutely, yes. Friday being one of the best days, and no complaints when the markets have hit 23,000, of course. So, today's topic for Pathshala is very interesting, and it tells you, a sense of, stocks getting into a second leg of a breakout. So we see that, stocks generally get into a phase of consolidation, then a slow pickup of price action, and then all of a sudden there is a hurried price action which happens for the stock, and that's where these, formations, they tend to pop up on the chart. So that's, one of the key patterns which is gap up. Now, interestingly, I've taken two examples. One of them is a very interesting example which in the recent past indicates that the stock had gone through a very slow gradual uptrend, but the moment the stock had seen a gap up, we look at the first chart over here, the stock started to show signs of a very strong uptrend for itself, and that generally happens at a point when the stock gets into a very strong uptrend, then a mild phase of correction. If you can look at the first chart over here in terms of the gap up. So this is the first chart, which is Samvadna Motherson, the stock getting into a breakout mode. As you can see that the stock was going into an uptrend. This was the gap which the stock had formed in the month of July. Post that gap, the stock went into an uptrend. Interestingly, this gap became a major support for the stock, and even when the stock got into a phase of correction, You see the gap, acted as a major support point, which was closer to this 85 mark. And from there, the stock started to launch a new trend for itself and then moved up higher to now levels of 135 to 140. So this gap forms as a major zone that the stock breaks out, and in case if there is any kind of a major correction post that, this gap acts as a major support for itself. Now we look at another example over here in terms of gap up, how the stock gets into a strong uptrend, and that's no exception. Chart like Hindustan Aeronautics, which you've seen over the last few months, scale to from levels of 2,500 to now almost 5,000 plus mark. So this was the gap which the stock had formed over here. The stock got into a very strong uptrend from 3,200 levels. Very swiftly, the stock moved up by a margin of 10%. This gap acted as a major support. There was a minor correction, but this gap was fortunately not filled. Now, interestingly, the second, rather in this phase of consolidation, as you can see, that the stock remained into a tight range of consolidation. But the moment we saw the stock forming a gap over here, you see the pace of rally for the stock, and this gap acted as a zone where the stock breaks out of a consolidation and starts off a major uptrend for itself. So now, on the way down, in case if there is any kind of a correction for the stock, this zone of 4,000 and the gap for the stock would act as a major support. So that's the importance of gap ups, especially when a stock starts to get into a zone of consolidation and then all of a sudden a fresh breakout for itself.
All right, that's something new that we've learned in this episode of Buy Now Sell Now Pathshala, and that is the entire topic about gap up. But on that note, we'll slip into a break on this edition of Buy Now Sell Now.
Welcome back, and you're watching Buy Now Sell Now on ET Now. It's that time on the show when we get started with all the stocks that you all have sent your queries on. And viewers, if you all are joining us for the first time, then do not forget that you can send us your queries on the WhatsApp number that is flashing on the screen right now. So yes, let's get started with the queries then. The first query that I have is coming in from the viewer, Dilesh. He's a long-term investor and he wants to know on Garden Reach Builders for a period of 5 years. So yes, we do have Kunal Bothra as well as Sharmila Joshi joining in with us. Sharmila, this one is for you, and very good morning. Thank you so much for joining in with us. Garden Reach, long term, what's the view?
The thing is that we've really seen this big run up in all these defense stocks, as well as especially the sort of shipbuilding space. And with Garden Reach, I think the good news is that the numbers were good. Again, I think their order book looks very strong. My only problem with this space is that the price of the stocks has gone up too much too quickly. So I think they've given like 1,000 plus sort of returns, in the last couple of years. So the only caveat would be that perhaps you may not get those kind of returns over the next. You may not get those kind of returns. But since the investor has this 5-year sort of horizon in mind, I think that's a fairly long period to be invested in a stock, and that's a good horizon for a stock like Garden Reach. So I think just keep tracking the numbers and see that the order flow and things like that stay on course. But otherwise, the stock at this point looks a little expensive in terms of valuation, but with a 5-year perspective, it should be fine.
That's the take coming in on Garden Reach. In fact, let me get a technical view on Garden Reach Shipbuilders, because Kunal, yes, after that lull that we saw in most of these PSU counters, after the massive rally that they took, that was underway, you can see Garden Reach and in fact other shipbuilding companies also, they've seen a steady up move. Do you think that this is in anticipation of what is going to happen in elections, because most of these PSU counters have been rallying on basis of that also, right?
So absolutely yes, and I think today's Pathshala is actually an answer to the question for Garden Reach, because the stock 2 days back formed a major gap for itself. So I think the 1220 mark, if I'm not wrong, was the start of this gap for Garden Reach Shipyard, and the stock from there has now moved up higher by almost 250 odd points from those 1220 odd levels. So which means now the 1220 mark should act as a major support. If in case you are looking to buy at current levels, keep the quantity a bit low, because of the recent run-up the stock has shown in the last 2-3 days. And I think closer to 1220 mark, in case if the stock dips down and say gets into a phase of correction, is where you should look to average further for Garden Reach Shipyard.
Okay, surely that is what we're keeping an eye out on. The next query we have is from Sridhar from Coimbatore, holding BHEL call option. Kunal, this one is also for you with a May expiry. 305 is the strike price at rupees 9. What should they do with this?
See, I'm not sure the current price for the option. I think it's okay. So my sense is it's around 7.5 to 8 rupees for BHEL. It's a very good stock from a long-term play. Now the stock has been to a very strong momentum, and fortunately the stock in just the last 2 days has seen a very mild correction. Of course, on the back of some disappointment in terms of results. But I would probably suggest that if the stock doesn't close below the 300 mark, say in the next 1 or 2 days, there could be a strong case that the stock may try to come back to that 310, 315 levels pretty soon. So I'm not sure whether May expiry could be a good confinement because you just have I think 3 or 4 days left for the May series, so that could be a bit tricky. But I believe that 300 on closing basis should be a stop loss for this trade.
All right, this next query that I have is coming in from Krish, and though his query is on a long-term horizon, he's asked Kunal, but I'll take this to you, Sharmila, because he wants to know about ESAB India, 25 shares at a price of around 5,100 rupees per share. He's saying that he likes the stock, but he wants to know for the long term, how does the counter look to you actually, fundamentally, Sharmila? Of course, he will like the stock. He's making good profits also for now.
Well, I think he's right in liking the stock, and he should just stay put because I think the numbers look good, the valuations are I'm comfortable with. So overall, this is a stock that he can continue to stay invested in. Of course, I think if he wants a chart check, you may as well take that too.
Okay, that's the word coming in on ESAP. Keep an eye on that. The next query is that we have this morning, and this query is from a viewer, and it's on B. Soumya from Chennai. They have bought Central Bank at a price of 50 rupees and Ease My Trip at a price of 43 rupees. Kunal, for the short term, what's the view?
So Central Bank, I think, is a fantastic buy because I sense that the stock is just about on the verge of coming out of a major consolidation. Time could be the constraint over here because I believe that maybe if the stock, consolidates for a couple of weeks, it may just about linger around this 65, 60, 6 odd pivot range, maybe few points here or there from that 65 odd mark for Central Bank. But I think it's a very good chart. It's poised for a breakout. I think it's just a matter of time, as I said. Now, on the other hand, Ease My Trip is a bit of a disappointing chart because the stock has gone through a major phase of consolidation and it still doesn't look like that the stock is seeing any pickup of volumes, which means that the stock may consolidate for some more time. I'm not sure whether you're looking to buy or add fresh, but in case if you're looking to do that, then I think just around that 40, 42 odd levels, which is a strong support zone for Ease My Trip, that could be a better zone if you're looking to accumulate or add further.
All right, this one is coming in from a viewer. This one is from Sri Kishore Sharma, who's writing to us from Bihar. And he wants to know about Tata Motors, about 100 shares at a price of 949 rupees per share. He has bought this counter for the next 3 years. He wants to know what should he do. What's your take on this, Sharmila, given the fact that he has bought it at a fairly elevated rate compared to what most of them have bought Tata Motors at? Do you think that now at this level, stay put for 3 years, hopefully he'll make good profits coming in?
So, first of all, I like the way investors are writing in with 5-year horizons, year horizons, because, I think those are really the long-term horizons when, you say that you want to be in the stock for the long term. Yes, I think I agree with you. The price seems a tad high, especially given the fact that Tata Motors, I mean, I've seen the stock in double digits, but then I've been in the market for a very long time. I own the stock as a disclosure. But I think the sense that I get is that for Tata Motors, a lot of things at one time, everything was sort of, they're invested in, they're present in many different bits and pieces. They have a international arm, even in the domestic, they have passenger vehicles, commercial vehicles. So they're across the range, and something or the other within that space would go wrong and sort of drag the numbers down. Of late, we've seen that the numbers have started to come good, and all the pieces seem to be doing well. So I think one can be positive on the stock. 3 years is a long time, so I would definitely recommend that he a check on how the numbers are doing, and because I think the run up that we've seen is really because of the kind of products they were able to offer, their entry into electric vehicles, and all of these things happened at the correct time. So they need to continue on that path. That you need to see good models coming from them. They sort of need to be in the space that market is liking. By market, I don't mean the stock market. I mean, the people buying cars or vehicles. So they need to be present in that space with good products. So those are the things you need to watch out on. Having said all that, I'm not selling what I have, and I would recommend him to continue to hold.
Okay, the next query is from Prathamesh from Mumbai. Kunal, this one is for you. It's on National Fertilizers. They bought it. Can they buy National Fertilizers at the current level for a period of 6 months?
Yeah, you can. I think the stock is just about getting to a breakout. Now trading, I think, around 107, 108 mark, but it's the more on the weekly charts where we're seeing a breakout, and the potential of this pattern is just about some, I think, 15 to 16 odd points. 108 is the breakout point, and 93, 94 is the previous major support for the stock, which means it could be almost a 15% trade which you are looking out for in the next 3 to 6 months. So I think it could be a good trade. But then, of course, the risks could be pretty much on the higher side because of the high beta nature of the stock.
All right, so that's the take coming in on National Ferd. But on that note, we'll slip into a break on this edition of Buy Now Sell Now. When we come back, we'll continue taking your query, viewers, so don't go anywhere. Welcome back. You're watching Market, I beg your pardon, Buy Now Sell Now on ET Now, and let's talk about the stocks that, or the queries that we are getting in. And looks like I'm already preparing myself for the 1:30 show. But Kunal, let me come to you, and let's talk about Man Infra and Man Infra as well as Bajaj Finserv. Our viewer Sudha has had these counters in her portfolio, and she's saying she's not seeing any returns for the last 2 months. Does it make sense to sell both of them and instead look to buy Thermax or Vedanta for a period of 2 years?
So Man Infra as well as
Bajaj Finserv.
Bajaj Finserv. I think out of them, Man Infra is something which you can probably look to book out profits over here. Bajaj Finserv, I think you should hold on. Yes, the stock is going through one of the worst times in terms of the price trends because it's one of the leading stocks from the large cap space. But it's a phase of the market where you've seen Bajaj Finance, Finserv underperforming, but I believe sooner or later these stocks will play a very strong catch up, and I think in that sense you should probably try and position yourselves over there. You can look to exit Man Infra, and I would probably recommend that shift to the likes of L&T. I think from that cap goods space, I think that's a chart which has started to look very attractive. It's still pending towards a breakout of the previous size of 3,800. So rather than shifting towards Thermax, I would believe L&T could be a much better bet.
Okay, let's move on to the next query, and this one is from Raghuraman from Trichy. What he wants to know on the long-term basis, Sharmila, is IEX. He's bought it at 161 rupees, and Bajaj Finance, he's bought 7 shares at 7,000 rupees. What should one be doing right now? Continue to hold this, and PFC, how is it looking fundamentally?
So that's a lot of queries. Let me address IEX first. I think it's a stock I like because conceptually this is, the kind of exchange you're talking of, an energy exchange, the kind of products that they're offering. The problem has been that government policies tend to change, and that affects the outlook on this stock. And we've seen the stock correct and sort of stay at this price. So, I think it might be best to really exit the stock because, this is not the kind of concern that you can plan for or, really address because you don't know, because power being such a sensitive sector, you don't know how things are going to change and how laws are going to change, etc. But conceptually, it's a stock that I've always liked and recommended. Unfortunately, as I said, they've had all these headwinds that have come their way, and that has taken its toll on the stock price. Coming to Bajaj Finance, I think we had a query a little while earlier about Bajaj Finserv as well. So I think both the Bajaj stock, the Bajaj twins, I like. And if you're a long-term investor, I think it makes perfect sense to stay invested in them. Once again, PFC is a stock that I continue to like. Once again, the stock has gone up very sharply in this last year and a half. But I think with good reason because, the kind of consumption that we are seeing of power as well as the overall outlook, I think that these companies will continue to do well. Maybe not give you the kind of returns they have in the last 2 years, but if you're a long-term investor, this is a space that I would recommend being invested in.
All right. This one is coming from Ashish Bhushan, and this one he wants to know about Johnson's Controls Hitachi Air Conditioning. That's the counter. GCHAC Kunal, 401 shares at a price of 1,250 rupees per share. Johnson's Control or Hitachi Air Conditioner. Shreyansi, in case if you find those, that's the name of the counter. He's saying that the stock has hit an upper circuit today, so he wants to know whether he should stay put with this for the next 6 to 12 months. What sort of a target should he look at Kunal, for this one?
Yeah, I think you should definitely stay put. And I think after 2 years, if I'm not wrong, 2021, the stock made a top at around 3,000 levels. From there, it had fallen down to as much as 950, which was the low the stock had made in the 2 months back. So I think from there, the stock has started to show signs of very good recovery. First signs of the stock forming a gap up after such kind of a strong volume up move. So this could be a clear-cut case of a breakout for the stock. But you may not see an immediate follow through. It could be possible that for the next 1 or 2 weeks, the stock may just about remain into a consolidative phase. The volumes may dip down. The stock may just about get into a drift. But after such kind of a strong gap up move, the supports for the stock has risen up higher. So I would probably suggest to hold on to the stock and look to add in case if it dips down to say 1300, 1350 mark.
Sharmila, we have V. Murli from Bangalore who wants to know on two stocks. One is Just Dial or eMudra. Which one looks better at the current price for a long term of 2 years?
I'm sorry, I didn't get the first stock.
Just Dial and eMudra.
I think e-mudra, because Just Dial, I think it's had its sort of concerns and they've overcome them. But I think overall going forward, the way we are looking at that you require everything to be in its demat form, and that whole push towards beg your pardon, having everything in an electronic form makes me think that there could be better prospects in e-mudra going forward than Just Dial.
All right, let's take the next query then, and this one is coming in from for you, Kunal, and this particular query is from Thomas George, who's writing to us from Kochi, and 70 shares of Hitachi Energy he bought at the levels of 1,805 rupees per share in August 2021. Now he's saying that the PE ratio is above 400. Will it be prudent to hold on to the stock? He can hold on for the next 1 to 2 years. I'll take this query to Sharmila instead, since he has been holding it for a long time right now. I like, Sharmila, how you're nodding your head. What's your take coming in on this one? He's making spectacular returns on this one.
Yeah, so clearly a query I don't want to answer, because yes, valuations look expensive. Once again, a stock that I own. So I'm not selling it because I think that good things are happening in the company and you could see better prices. I mean, there could be corrections in the near term because, the stock has gone up very quickly in this last month or so. Having said that, I think if you're a longer term investor, you should stay invested.
Okay, let's move on to the next query. And Kunal, this query is for you. It is from Sunil. They're holding 400 shares of Piramal Pharma at a price of 150 rupees. For the short term, what's the view on Piramal Pharma?
See, short term wise, I think 160, 165 could be an upside for the stock. And I think it's just about getting into a zone of consolidation. There could be a phase where the stock may actually drift down and come back towards 135 to 140 mark. So I believe that if you're looking to buy the stock, then a better buying zone should be closer to 135 to 140 range.
All right, this one is coming from Ajit Walter, who's writing to us from Muscat. Ratan Power, 2,000 shares at a price of 4 rupees per share. Sona BLW, 200 shares at a price of 549 rupees per share. He wants to know what's the long-term view on both of these counters. Sharmila, what's your take coming in on Ratan India Power as well as Sona Comstar? Ratan India Power, in fact, yesterday we spoke to Mark Mobius and he's also added this in his portfolio. What's your take on this one? How is it looking fundamentally?
Well, things are improving. So I think he's got it at a great price. So he should definitely continue to hold it. When it comes to Sona BLW, again, I'm positive. I'm really positive on auto ancillaries as a space. And I think that this is a good fit within that space. I think that because we've had this, just to sort of explain why I like ancillaries as the spaces, since we've had this new policy on electric vehicles come up, it sort of ties in the fact that you have to have your ancillary tie-ups within the country as well if you're planning to set up an EV shop here. So I think we'll see this play out post-election, and this company in any case has presence even outside as well. So I think that these are typically the kind of companies that stand to sort of benefit from that. So I think both stocks he should continue to hold.
Okay, this next query is from Naman Devra from Kolkata. Kunal, it's a very short-term query. The time period for holding is 30 to 45 days. And they want to know, out of Cochin Shipyard and Mazgaon Dock, which one of these two stocks do you think is a good buy for a very short term?
Well, difficult to say that because I think these stocks are hugely overbought. When you look at the last 1 week of chart, say, 8, 9 trading sessions approximately, I think these stocks have given returns of almost 50% in this kind of a time span. So I think it's very difficult to expect that these stocks would deliver another 30, 40% from these levels on a much shorter term time frame. Buy on dips could be a better strategy, but I would not advise at current levels.
All right, this next query that I have is coming from our viewer, that is Suresh, who's writing to us from Kerala, and he has 60 shares of KEI Industries, which he's purchased at a level of 3,890 rupees per share. Kunal, he wants to know whether he can buy some more at this point in time. Do you think it makes sense to buy some more at this point in time, or hold on to what he has?
I think just hold on to what you have. In the last 10 odd years, the stock has moved from 15, 20 rupees to now 4,200, 300 plus mark. So that's an huge exponential jump for the stock price. So it's more of a long-term, kind of a stock in terms of price trends. But again, I think at current levels of 4,300, I'm not sure whether there is major room of upside for the stock on an immediately short-term basis. So I would suggest that you should wait for significant bouts of correction when you're looking to buy these kind of names, not at current levels.
The next query is from Lakshmi from Hyderabad, and Sharmila, she wants to know on Nazara Tech. She's holding 50 shares at a price of 800 rupees for the last couple of years. Should she hold this for the next couple of years, and is it a good bet?
So again, I think that in that sense, it's a sort of a niche play because you're looking at a company which is focused on gaming, and that's obviously a very sort of big story that can play out. The problem that happens again with this is that a lot of changes happen in the way law looks at the taxation and other sort of problems sort of crop up. So it's that way a very new and nascent space to be in, and I think that's what sort of got gone against this play. Because if you were to just ask me if a gaming company is going to do well, the obvious answer would be yes, given how much time all of us spend on our phones playing mindless games. But that said, that's the risk you carry. But otherwise, I think that in terms of business, if you can take the risk, it's worth holding on.
This is coming from a viewer, Rohit, and Rohit is complaining that we've not been able to take his query for months. Sorry, Rohit, about that. We may have missed your query with the rest of the queries that have been pouring in, actually. And he wants to know about Som Distilleries, Kunal, as well as Indian hotels. Can he buy today for the long term? What's your take on Som Distilleries as well as Indian hotels? Both of these counters have had their share of rally, and do you think these prices are a good price to buy now?
So Som Distilleries, if I'm not wrong, has just gone through a split 5:2. I think that's why the prices are adjusted from 350 odd levels to now around 135 to 140 plus mark. Excellent chart. When you look at this from a long-term time frame, you can consider buying the stock at current levels. But I believe that the major support for Som Distilleries is now on an adjusted price basis closer to 125 mark. So I'm not sure whether the stock would probably dip down to those levels, but that could be a very good territory in terms of risk reward to go for a fresh buy for Som Distilleries. So you may start buying small quantities at current levels and wait out for any kind of dips if it happens to come by. Indian hotels also, on the other hand, I think a much better chart now this time around, which are propping up on the from the hotel space, hospitality space as such, are the likes of Chalet, Lemon Tree as well as EIH hotels. So I think those are much more better bets in terms of the potential price uptrend. The beta could be high for these stocks, but the way the charts are positioned could be much more better. So it's your choice. I mean, if you're looking to shift to some other names, I would recommend Chalet, Lemon Tree as well as EIH hotels as much better bets.
Okay, that is the query number 18 for right now. But on that note, we're going to slip into a very short break. Don't go anywhere. We'll be back with more of your stock related queries after the break.
All right, this one is coming. Oh, sorry. Welcome back. You're watching Buy Now Sell Now on ET now. Excited to take all the queries that are pouring in. This one is coming in from SK Yadav from Gurgaon. And he has a query on Jubilant Food, 400 shares at a price of around 576 rupees per share. He's been holding on to this counter for the last 2 years. What's your take coming in on Jubilant Food in particular? Actually, Sharmila, I'll take your view because this one has just come out with his earnings, and also you've seen a lot of changes coming in, a lot of competition also coming in this particular stock or the sector per se. What's your take on Jubilant Food? Because our viewer has not been making money.
I think you're just waiting for you and me both are just waiting for the end of trade today more than anything.
I wouldn't doubt that, and I wouldn't question that statement at all. Actually, I'll second the statement. I think we should add to that list even Vinny and Kunal, because Kunal also is always in the Friday mood, isn't it, Kunal?
Absolutely, yes.
Yeah, but jubilant food also, I think, is one of the reasons why all of us also wait for weekends to binge.
Yes, absolutely. But I think it's what you said, that there have been multiple things that have gone wrong for this stock. We've seen that, the whole thing, whether it's the hit on the margins, the entry of lower price competition, and a whole host of issues have hit this space and this stock in particular. So the outlook is not particularly as good as it used to be. Having said that, the valuations at this point makes me think that it can go up from the current price. So I would actually recommend a hold based on just the valuation and the fact that they are in a space that will, see, consumption is going to return. We are seeing a little lower consumption on a whole host of, not just quick service restaurants, but on a whole host of FMCG sort of play. But I think, once monsoons are good and as we come to a sort of festival season, you could see things pick up. So I think give yourself about 12 to 18 months and stay invested.
Okay, that's about Jubilant Food. Let's move on to the next one. And Interglobe Aviation, Kunal, that's the query coming from Smita. They bought it at a price of 4,067 rupees. They've reported their numbers also yesterday. But for a time period of 1 to 2 months, since they've been holding it for some time, what is the suggestion? Should they continue to hold this right now?
I think it's a good time where you should look to book profits over here for Interglobe Aviation if it's a short-term kind of a time frame which you're looking out for, because I believe that the stock has hit a resistance of sorts around the 4,400, 4,500 zone. I think if I'm not wrong, today's high and low is almost high and open is almost the same at 4,500 plus mark for Interglobe Aviation. That generally earmarks a near-term bottom at play for stocks, and we may potentially be at a point where in the next 3-4 days the stock may correct by say another 150 to 250 odd points. So I think it's a better price to try and maybe book out profits over here and then look to re-enter on corrective phases for Interglobe Aviation.
All right, this one is coming from Edwin, who's writing to us from Kerala, but he is residing in Bahrain, is what he's written to us. He has 20 shares of Vare Renewables, and he's bought it at the price of around 1,880. He's bought it today, I believe, is what he's saying. Yeah, he's bought this today, hoping for a profit of about 25%. Kunal, is it possible for Vare by any chance? Or actually, let me take it to you, Sharmila. What's your take coming on Vare Renewables, that particular stock you're seeing after a sort of an adjustment? That's why the stock price or the chart is looking like that. But what's your take on this one? Because this one has benefited with the entire surge that we've seen in the renewable space, the power space as well.
I think from a longer term perspective, I would continue to be positive on the entire power or the renewable power sort of space. Once again, here I think valuations have gone up too much. So I don't know whether 25% return is, is the expectation for a very short period? Then I don't know. But if you're a long-term investor, I think you can stay invested.
Okay, let's move on and to the next query. This one is a short-term query, Kunal, and it's on Bandhan Bank. Parvinder is holding 70 shares at a price of 218, and the other one is also Datamatic at 40 shares at a price of 662. Can they continue to hold this for a period of 3 months?
Bandhan Bank, you can hold on, but as I think over the last many months I've been pointing out that the stock is still into a downtrend. Now there is a hope that the stock could probably get into a breakout. 195 approximately is the first immediate resistance for the stock. It's now in very close distance, just 4-5% away from that 195 mark. So you may hold on to the stock because of the wave these market wave is currently more poised towards the private sector banking names. I believe that potentially maybe sooner or later the likes of Bandhan Bank can see a breakout. So you can hold on to that in that anticipation. Datamatics on the other hand, again a chart which is now showing signs of correction. The recent top was made in the month of December when the stock had hit 750 plus mark, and from there Datamatics has now gone to a 10% correction, more than 15% correction so far. So it's a chart which is going into a corrective phase, may consolidate for some more time. So you may consider holding on to the stock, but I think you may probably have to be a lot more patient over here in terms of time.
All right, with that, let's kickstart with a rapid fire then. First one coming your way, Sharmila. This one's from Rahul Reddy. Wants to know about Ujjivan Small Finance Bank. 450 shares at 53 rupees per share. For the long term, stay put or add some more?
I think
Gaurav from Bangalore Kunal wants to know about the Bank of Maharashtra. Should they enter at the current price?
Well, yeah, I think good price. Current price 68.5 could be a good level to enter.
All right, this one is coming from Balkrishnan from Chennai. Wants to know whether he can add TTK Prestige and Tamil Nadu Mercantile Bank at current levels. Kunal, what's your take?
Don't track Tamil Nadu Mercantile Bank, but I think TK Prestige could be an avoid.
Sharmila RK wants to know in terms of Vedanta, VA Tech, Vabag and Electra Green Tech, which one is a better bet for the long term?
I actually don't like anything in this list. Maybe Electra Green at the moment.
All right, this is coming from Mahalakshmi holding 20 shares of TVS Motors since the last few months. Kunal, can she add some more shares, about 100 shares right now in a portfolio for 1 year?
Yeah, I think good strategy to add.
Anjali from Nashik, Kunal has UPL futures at 505. Hold, book or rollover?
Hold as well as possibly rollover for next series.
All right, Fred wants to know for the medium to long term, is Ircon and IRFC a good bet right now to enter, Sharmila?
They're good to hold. I don't know about entering.
Kunal, Suresh he wants to know in terms of Inox Wind, what is the view on Inox Wind for the short term? They're holding it at a price of 134.
Continue to hold on.
Okay, Satyam wants to know about Deepa Fertilizers, 500 shares at 814 rupees per share. Kunal, what's your take?
Underperforming stock, but hopefully the stock will probably get back into a breakout over 625. That would be a trigger point for the stock.
Okay, we have the next query and this is on Jubilant Ingravia. And Sharmila, for the long term, what's the view for Jubilant Ingravia? The viewer is holding it at a price of 550 rupees.
I think he can continue to hold it.
Coming from Varghese from Trivandrum, Kunal, this one is for you. GMM, Fodler as well as Navin Fluorine. Good time to buy these?
Navin Fluorine could be a very good stock to look at.
All right, with that, we come to the end of the rapid fire as well as a query segment. Thank you so much, Kunal, as well as Sharmila for joining us on the show. Hopefully, Sharmila, you will end your day much sooner today, given the fact the markets are actually seeing a good up move. And thank you so much, Kunal, for joining us for Pathshala. But with that, let's talk about all the action on the election front that is happening across the country. And campaigning for the 6th phase of Lok Sabha polls has come to an end. The polling for the 6th phase will begin tomorrow with a total of about 58 seats up for grabs across 8 states and union territories. All 10 seats from Haryana will finish polling tomorrow. Meanwhile, election preparations are underway in Delhi. All 7 seats are going to poll in this battle for Indraprastha. Also remember, the polling parties were dispatched with EVMs to voting centres in northeast Delhi and other areas as well ahead of the 6th phase of elections.
Prime Minister Narendra Modi said that he had been in power in 1971. Had he been there, he would have taken Kartarpur Sahib from Pakistan before freeing their troops. PM also launched a fierce attack on the ruling Aam Aadmi Party in Punjab, saying the drug trade is flourishing in the state and the government is in debt. He said Delhi's fiercely corrupt party and the party which is guilty of anti-Sikh riots are doing a drama of fighting against each other in Punjab. And Sairia Praveen, a BJP leader and notable figure in Sandekh Khali movement, joined the TMC on Thursday, attributing her decision to delusionment with the Saffron Party and a sense of suffocation within the party's ranks.
All right, and that's all the action happening on the election front. But with that, we come to the end of this week's edition of Buy Now, Sell Now as well. It's a goodbye from Vinny Shrishti, Shreyansi as well as the director Trevor. Thank you so much for watching. But stay tuned, Marcus Noon coming up next.
If you like this video, then like, share and subscribe to ET Now.